Hey, how's it going, traders? In this video, we are going to break down ticker symbol SPCE or Virgin Galactic. As you may know, in the last 2 days, it dropped almost 25%. Yeah, 25% from highs of 35 down to 26.50. Why did that happen? How do we trade it? When do we buy? When do we sell? All that and more coming right up. If you guys aren't already in the team's Discord, it's the first link in the description. Go join it. We just completely revamped it, and we're gaining numbers like crazy. Almost 40 people joined just yesterday alone, so don't miss this opportunity. We are going to close this Discord out at around 1,000 members, so it's the first link in the description. Hope to see you guys in there. Alrighty, so breaking down ticker symbol SPCE. As you can see, it took quite a hit in the last 2 days. It was at highs of $35 just 2 days ago, and now it's all the way down to lows of $26.50. Now, it's since rebounded up to $27.30, $27.50 range. As you can see, I did take a small position in it. 1,500 shares. I will continue to add up if it continues to trade higher. I tried to catch a quick bounce. Again, this is generally a 1/4 to 1/3 overall position size. I am up $300. It's since gone down since I've tried to record this video. So why did it go down almost 30% in 2 days alone? Well, it had its earnings report almost 4 days ago, and it failed to beat expectations. Now, they did sell 1,100 tickets, I believe, and the price per ticket, get this, is almost $500,000, $450,000 per ticket, and they sold almost 1,200 to 1,100 range. So apparently that did not beat expectations. They wanted to sell more within the first few weeks of releasing their ticket sales. Now, it didn't see a direct impact when it came to price per share. When it actually increased the overall share amount. As you can see, I had an earnings report after market 5 days ago, and it actually went up from $31 all the way up to $35 a share. So retail investors thought it was actually a good earnings report. Now, over the course of a few days after people dived into the earnings report, a lot of these big money hedge funds actually lowered their price targets from $45 a share to $38 a share, some from $50 a share all the way down to $25 a share. So when it comes to price targets, I'm not a huge fan of them because I find them to be extremely inaccurate. The same company, Morgan Stanley, that gave a $25 a share price target on Virgin Galactic also gave an extreme bullish case at $90 a share on FSR. I think that's completely ridiculous. That's way overvalued. They don't even have a car in production yet. So I personally think when it comes to price targets, I'm not a huge fan of them. Now again, I do have a small position to see if it does have a very nice bounce leading into tomorrow. If you guys caught my last video I posted, I bought Robinhood at $50 a share. Now I bought 500 shares and sold it at almost $60, making almost $5,000 on that trade. Now, a lot of people thought it was going to continue to sell off, but I saw for there to be a really good oversold buying opportunity right here, and I saw for there to be a decent reversal and a nice trade. Now, I'm not saying this is going to exactly happen when it comes to ticker symbol SPCE, but I've been waiting. I've been honestly dying to invest in this company, but I didn't want to invest in the high 30s, so this is a great point for me to buy in to start to average up my position. Now again, I have 1,500 shares, and that's generally around 1/4 of my overall position size. I really like this company. I like where it's headed. But again, you do not want to buy all your shares immediately. You want to scale into your position and scale out. Now this helps when it comes to risk management, to having a lower dollar cost average. Wait a minute, pause video. Make sure you like and subscribe if you guys haven't yet. Make sure you do so before the video ends so you don't miss out on any awesome content we release. But other than that, right back to the video. Now let's talk about my personal trading plan, where I plan to lock in profits, cut losses. But first, let's talk about where do I plan on cutting my losses if this trade does continue to go south. Now tomorrow, it can very easily continue to sell off. If it starts to make lower lows and breaks below $26.50, I will look to sell half of my position and then buy in later. I really do not think this will go much below $25 a share. I think it's a really even price target for this stock. Now, I will probably buy more off the $25 and look to buy more as it sells off, if it does, to the lower 20s. Now, where do I plan on locking in profits? If, just say tomorrow, it has a really heavy bounce like it did on Sava, like it did on Robinhood. The last few trades we've had, as the stock becomes very oversold, we've caught awesome bounces on this. Now, I will look to add more if it breaks over $30 a share. That's a really bullish signal for me, indicating that a lot of these retail traders, a lot of these investors don't really care what these hedge funds are saying about price targets, and it's going to continue to trend up anyway. $30 is a really good price target for this stock. I think if it breaks that, it's a very bullish signal, and I'll look to probably double my position, looking for a solid move up to 35, potentially 40 over the next few months. Now, what made me buy in today? personally, when it comes to buying these dips, I really like utilizing the 15-minute chart and the 30-minute chart. As you can see on the 15-minute chart, when there's a bullish engulfing candle, meaning as the move continues to go down and a green candle gets bigger than the last red candle behind it, that is generally a really good buying signal. So I bought some right around here, on just before it broke above $27 again. I think my first buy was like $26.85 range, and then I continued to buy more as it got above the 9 EMA, this green line right here on the 15-minute chart. Now heading over to the 30-minute chart, it's the same concept. When there's a bullish engulfing candle like it was right here at around noon, that was a really good signal for me, so I continued to add more to my overall position. Now I did buy a lot more right before market close because it broke above the 9 EMA. As we can see in previous days prior, it acted as a really good resistance line. It could not hold above that 9 exponential moving average. So as it broke above it, right before market close today, I did add one more time for a total of 1,500 shares. I have 3 initial adds, and I'll look to add more tomorrow. Heading over to the 6-month chart, if I were to zoom in on the RSI, the relative strength index, every time it got to this oversold blue level, the next few days were pretty decent trading. This went from $23 up to $27. Right here actually went from lows of $23 all the way back up to $36, and right here it went from about $15 a share, and it had a really great bullish run up to $60. Now, I'm not saying this is going to happen again, but as you can see, every time it is oversold, generally the dip gets bought up pretty aggressively. So I look for a really nice bounce tomorrow. Again, if it does continue to sell off and create lower lows, I will cut my losses and look to buy in lower, around 25 to low 20s. Now, where do I plan on locking in profits, hypothetically, if this trade goes 100% successfully? Now, I will lock in some profit as it starts to creep up to the 180-day simple moving average. This is often a really good indicator of being a support line, being a resistance line. Now, where do I plan on locking in some of my profit? The first sell, which is 1/4 of my overall share size, as we talk about scaling in and scaling out of positions, is going to be when it starts to approach this 180-day simple moving average. It's often a great support and or resistance for stocks, so when it gets up to the high 30, maybe low 40s, I will look to lock in 25% of my overall position, and then I'll continue to sell as it goes up. Now I'm going to sell probably half my position as it gets to the $60 range, as it's a very oversold level for the stock. As you can see, every single time it got into the $60 range, it aggressively sold off all the way down to the low 20s, one time even down to $15 a share. So I think $60 at the given moment of this company is a little too much. Now, if it does go up there in the next month or so, I would probably sell half my position and let the other half ride out for like a long-term hold. So there you have it. That is my overall trading plan when it comes to trading ticker symbol SPCE. The reason why I bought, where I plan on locking in some of my profit, potentially if I have to mitigate risk and cut my losses. That's my overall trading plan when it comes to trading ticker symbol SPCE. Like if you guys agree with this video, if you guys potentially are already invested or plan on buying into the stock. If you guys haven't already, go watch my last technical analysis on ticker symbol HOOD at $50 a share. The team and I traded it and made almost 20% gain on that. I personally made just shy of $5,000, and my team made under $1,000. Some of them made a few thousand. Really good trade. Other than that, guys, don't forget to like and subscribe, and I'll see you in the very next video.